Welcome back, everyone. This is the weekly performance report. I have a few things I want to talk about before I get into the performance report. And if you're only here for that, let's see. I ended the week down 0.93%, and I got a couple of trades. My UVE and HCI Florida Home Insurance Hurricane Milton trade is up 19.3% and 7.4%. So with that said, you can leave if that's all you came for. Okay, so I've had an influx of subscribers as a consequence of the trade idea alerts that I've posted this week around the Hurricane Milton situation. Recently, and excuse the jumping around here, recently I was reading this one guy and how he started a thread on Substack and noted how people were unsubscribing from his channel because he doesn't put out a new idea every week. And he was like, no, I don't. And this guy makes comprehensive, detailed reports, quality, long, in-depth reports about an industry or about a trade idea or something like that. And people got the impression that they didn't like how he didn't put out weekly or bi-week, couple week reports. So that shows you the extent of due diligence that most people engage in. It's incredible. I wrote about the Dunbar effect. It's an article of mine. It's a video I made. You can look it up. And I noted how you should more thoroughly analyze people that you follow or you subscribe to or this or that, and how you really need to dial in who those people are, because you can only follow so many people. You can only keep so many track records in your head, i.e. you can only know how many people are full of shit and aren't, especially with all the deleting among Twitters and posts that go on. And what that tells me is that those subscribers did not look at his other work. They would see his publishing schedule and be like, well, this guy doesn't post every week or every other week or every month. And they're like, okay, I like this one article. Maybe I'll follow him as someone who occasionally puts something in my inbox. I'll read up on it, or okay, cool article, not really interested in his other stuff, move on. Same thing with Twitter perhaps. Like, hey, let me see what this guy's posted over the last couple of weeks before I follow them. And people can't manage to do that. And I suspect most of these same people's due diligence around companies they quote unquote invest in are about the same. And then people wonder why most people lose money, let alone underperform, but lose money in the markets. And so I suspect that the people, at least a reasonable percentage of them, are going to be surprised I don't do trade alerts every week or however often. And that brings me to my next point, which is I don't have many subscribers as far as I'm concerned when it comes to my unnameable writing platform, since people like to shadow ban, or my YouTube channel. And I've thought, what could I do about that? And there's some things that I'm just not going to do about that I could do for one reason or the other. I have thought, what would be a better way of getting more subscribers either way, and paid subscribers even better. And the idea is to give people what they want, which oftentimes ends up being a poison to them. And that would be trade ideas. I can just bounce around trade ideas, and then don't post my own trade. I don't have to do the trades. I can just, it's a different demographic of people. And so all I really have to do is put out a trade idea, not disclose, or just not participate in the actual trades. And in all honesty, that's not a bad idea, but people take it the wrong way. They consign their investing decisions to you. Well, he said invest in this. I was like, no, it's an idea. Like, do you accept every idea that people give you? So somehow you're both a Republican and a Democrat and a liberal and an anarchist? Like, no. So there's ideas you take in and you adopt, and there's ones that you dismiss, and there's others you examine, and so on and so forth. But I thought, I'm also curious, for those who follow this channel for any length of time and pay much attention at all, sometimes I trade a lot, sometimes I don't. It's normally with a smaller percentage of my portfolio, and I've tried to cut back on it. I really haven't done it much in months, and I would say that this insurance play for Hurricane Milton is the first trade I've really put on. Well, actually, that's not true. Right now, I have KSPI. I'm up 5.98% on it. So that's a trade. That's 3% of the portfolio. So you could say between that, HCI is 1.5, and then UVE is 1.5. So you could say 6% of my portfolio currently is in trades that KSPI I won't hold on to for any meaningful amount of time, I suspect, and then the other two, we'll talk about that in a moment. Just what I want to do, I don't know if I will, but what I want to do is have this trade. It'd be separate from this channel, I suspect. It'd be a different channel, different publication, and I would put out these trade ideas. And whether it's, hey, this shipping stocks are in a bull market, and this one's hitting TORM, T-O-R-M. I think TRMD is the ticker symbol. Last year I bought it with weak hands. I think it bounced off, was hitting the 200-day moving average, so I bought it, and it did well, but I sold it before that could happen. And things like that. And I'm curious what my performance would be, but I thought about setting up same way, $50 a week. And the hazard I'm making is I'm actually showing my performance of the trade ideas. You know, it's like, oh my, because that's heresy. You should never do that. You put the ideas out there. You don't actually show your performance. We've discussed this before. That's part of the genesis of Cup of Coffee Capital to begin with, is everybody's running their mouth but not showing the numbers, or they're paper trading or whatever else. And I thought about doing that. And I know that would get a lot more attention than this channel does, because I don't know how to put it without being absolutely insulting about it, so I'll just leave it at that. Outside of the outliers of actual disciplined traders who kind of like a macro or micro catalyst with some technicals. But I think it'd be interesting. And what I really think would be interesting is once it hits, I don't know, 1,000 subscribers, take it to revenue model, however much I might charge, no idea. And then this is where it is. Just like Peloton wasn't the product, the stock was the product meant to sell retail to enrich the insiders. That was, you the investor in Peloton stock were the real product. Or the stock was the product and you were the consumer. The Peloton was just a medium to express that. And there's many stocks like that, where it's the consumer is the purchaser and the product is the stock. And so along that spirit, I thought it would be interesting then back on this channel where we're actually serious about things, even though that channel would be serious because I would like to make money. But what'd be interesting is, because this is how most people do it, they make tons more money off of ad revenues and commercials and subscriptions than they actually do in their portfolio. Whether that be percentage returns or absolute dollar returns. Someone like me, my portfolio is $7,000 roughly, so that wouldn't be hard to do. But even the people with $1 million accounts, the subscription model, like the returns on that, is fantastic. And of course, you give the inflated number before taxes. I guess, I won't call it inflated, but you try to make the number as big as possible. So before taxes, before Stripe takes their however much percent, and so on and so forth. And then over here on the real channel, show you the returns on that. If I have 1,000 subscribers, I go to $10 a month, 100 of them stick around. even though probably be less, that'd be $1,000 a month. And here I would be with this $50 a week portfolio. It would just, it'd be interesting to like show that's the angle, that's the grift, and then people see this, so then that's what they target. If I started talking a lot more about tech stocks, I would get more. But it's just interesting because these are ways to make money. You could do it, the listener. Just start putting ideas, some hit, you talk about those, you don't talk about the misses. You say, hey, I made this much on this trade and this much on that trade. And of course, you know, and now there's some ethical concerns. Everybody says they have ethical concerns around that, but they're liars too, so take it for what it's worth. But I think participating and actually putting my own money up, I think it'd be interesting. And that all stemmed from the fact that my subscriber count grew, interestingly, more on the unnamed channel than the YouTube channel, which is interesting in and of itself. But that'd be something to look at. And I'm kind of curious because I think I would underperform this portfolio if I did that, but I could be mistaken. And there's a large part of me that wants to think that the way I'm doing things on this channel is the right way. And then, boy, that'd be really disruptive to my psyche to be making more money, you know, getting better portfolio percentage returns on the trade than this. So that, I find that bothersome because I actually think there's a risk of that. And then all kinds of presuppositions and axiomatic beliefs of mine are going to get shook as a consequence. But I'll post hoc rationalize. I'm smart enough to do that. Most humans are smart enough to post hoc rationalize about anything. So, and here's another interesting thing, because many of these traders, I understand I'm using the word trader synonymous with idiot, and that's because that is the heuristic, that is their stereotype. Stereotypes are real for a reason, generally. And I was speaking with this individual not too long ago, and they were talking about how they day trade and how that's how they make some money. And then it was like, well, do you make money at that? And then they said, well, I make more money than I lose. And I've seen this 1,000 times, so I just don't ask the questions anymore because it only disrupts the relationship. And I wanted to say, so what's your percentage returns? Like, what kind of returns are you putting up doing this to your overall portfolio on a cash-weighted basis or time-weighted basis? Like, what are you putting up? And I already know the answer. They wouldn't know. They do it. It's fun. It's rush. They think they make a little money. Maybe they actually do make a little money. But then it's like, okay, fine. You made 5%. You did, 100 trades over a year. You made 6%. You could have T-billed and chilled. Like, maybe that's a poor return on your time. But people like that aren't really concerned with return on things. So, like, your time is an asset. So what's the return on asset? It's just like they don't think that way. Seemingly they have nothing else better to do, or they aren't going to do that, so that's what they do. And that's the kind of people. Pandering is not the right word to use, but I don't know. And then, oh God, I can only imagine. Oh, you lost me. I didn't lose you anything. What are you talking about? Like, it was an actionable. Well, no, that's not true. It was an idea. Whether it's an actionable idea for you is dependent upon you. Yet again, do you listen to everything the Democrats say and the Republicans say? Because they're both saying things to you. There's going to be a lot of contradiction, like the cognitive dissonance that you must possess then, since you just do what everyone says, is astounding. Or is the reality of the situation you don't, and a lot of these people are just lazy and unsophisticated. So that's my ramble out of the way, I think. So I think I have another ramble in me somewhere in regards to Vario. We'll see if I do it or not. Oh, so noticeable activities over last week. I bought Universal Insurance Holdings, ticker symbol UVE, and HCI Group, ticker symbol HCI. Two noticeable events have occurred in my portfolio this week. Vario Growth has replaced their CEO, and Grown Rogue terminated their advisory agreement. There goes much of my thesis. You should never underestimate the capacity of people to grab defeat from the jaws of victory. Now, you might say that's a little harsh, but since they refuse to openly communicate what's going on, that's how I'm going to interpret it. Perhaps Vario has righted the ship and no longer needs Grown Rogue's help. Has Amber gleaned all she needs to know from Josh to be a competent CEO? Who knows? You'd think that us shareholders would know, but that would only be the case if people walked their talk. You know what I'm talking about. Just think of the number of people who say that people should tell the truth, the whole truth, and nothing but the truth, and how it's best to be honest and transparent with others, and then they'll turn right around and speak vaguely and ambiguously about matters. And that's exactly what the press releases did. Spin it in a positive light, this and that, leave out the details like why, and just kind of glean over things. But quite frankly, you have to come to expect that if you want to interact with, well, the human species, but just as well with investing, because that's how most CEOs will conduct themselves. Ultimately, I like their Minnesota assets, but that was predicated on competent management. A lot happened in 2023. Much of the industry market bottomed as far as I'm concerned. Merrill Lynn turned online. Josh became the CEO. The Grown Rogue Advisory Agreement occurred. I don't know how much of Vario inflecting positively was the result of external factors versus internal factors. What I do know is that I don't plan to stick around to find out. I have no intention of letting thesis creep encroach upon my investments. Speaking of thesis creep, the more I read upon the Florida insurance market, the more fascinated I become with it and its players. For those who missed it, I put out trade ideas for Hurricane Milton. One of those trade ideas was Florida insurance companies. So far, I've done well. I'll keep digging into this topic and perhaps I'll have more to say about it in the future. I ended the week down 0.93%, so almost 1%. Not quite sure how. Normally, I actually thought I would have been up a little bit, and I'm actually down almost 1%, while the market's up almost 1.5%, so that's 2.5% spread. Not really sure how that happened, what did poorly to cause that. Sufficient of a drag, especially with these trades up like they are. That's 3% of my portfolio, whoop-de-doo. But still, normally I go and track it down, but I've been busy, so I didn't do that. It is what it is, ultimately. And so this Florida insurance market idea fascinates me on multiple levels. First thing is, it is reading into it. Now, I might be late to the trade. I am late to the trade because I think it's, one of these, HCI and UVE, one of them's up 100+% since, call it October, November 2022 bottom, and one's up 200 some odd percent. And there's another stock in this group, and I don't know if it's ACIC or HRTG, one of them that's up, 1,000 or 2,000%. So that's always interesting. Here's the crazy thing is, I've not seen something more bullish. Very, very few times have I seen a story so bullish for an investment. Maybe what's happened, all the positive developments that occurred in 2023 for uranium would be up there. Perhaps Malay for Argentina might be up there. But what's happened in the Florida insurance market in late 2022 is astonishingly bullish for Florida home or property and casualty insurers. And what really pisses me off is I don't recall seeing it. I mean, I'm sure it's somewhere, and maybe I gleaned over it once I saw the word insurance, but I don't recall seeing it back then or really since then about this. So I follow these event-driven catalysts, inflection investing, value investing, cyclical investing accounts on Twitter. And maybe somebody said something in their newsletter along with 40 other ideas of, corporate change events or upcoming investor days that they haven't had for years, like whatever it may be. Like maybe it got lost in 40 other ideas they posited, but I don't recall seeing it anywhere. Like, how did this not get publicized? That I didn't see it. Not that I'm the most perspicacious individual or paying attention to my screens every day. How did I miss it? How did others miss it? Or maybe they didn't miss it. I don't know. Somebody didn't miss it because it's up 1 or 200 or 1,000%, depending on the stock. So essentially what happened is, long story short, is a bunch of changes happened in the insurance market in late 2022 that was going to allow the insurance companies to do well. And I know that's very vague, but that's because I don't want to give misinformation or false information, both because I don't want to misinform you, but also not look incompetent while stumbling over my words. But I've been reading about it. I actually typed into Spotify, Florida insurance. But I started reading about it, typed in these ticker symbols to Twitter, kind of let's see what people might have had to say. And it was just like some offhanded comments like, Florida's changed some regulations around insurance. Very nonchalant, casual. And for whatever the reason, it grabbed my attention. And I'm kind of surprised that it's almost an accident it grabbed my attention. And so for whatever the reason, I started looking into it like, well, what regulatory change happened? And like, my gosh. And so I wanted to find out as much as I could in regards to this event. And so I went to Spotify, like Florida insurance, maybe there's some podcasts. But I've been hearing about how insurance has been skyrocketing and this and that. And it's like, okay, why? And why specifically Florida in this case? And I found some global warming type channels that wanted to talk about how global warming is affecting Florida insurance. So I was like, okay, why not? And then I typed it into Google and read some articles. I came across this. Actually, I like the publication well enough. It definitely has some glaring political bias, but called Seeking Rents. Eventually, when I do a write-up on this, these things I'm referencing will be an article, at least the Seeking Rents articles. And all these people are just talking shit. It's the most bullish thing I've seen. Like, of course, political bias needs to be cautiously approached because they're talking hella shit on these greedy, bastard, corrupt Republicans and insurance companies and how they're keeping the small man down and all that fun stuff. And so it's like, well, exaggeration is what political bias is all about. So, but it made me extremely bullish. I'm like, my God, like, are you serious? And they're serious enough. Like, Citizens Insurance of Florida is now so these insurance companies, as long as they bid in within 20% of Citizens Florida, which is a state-run insurance agency, they can steal the customers. And then there's this chart about how much Citizens is going to have to raise insurance, anywhere from 10% to 200%, depending on the county. And they're only allowed to do 14% a max per year from 2024 forward, I believe. I think maybe they could do 15% in 2024, but afterwards it's 14%, which means they're going to have to be raising 14% for years to come. And to do the actuarial pricing, which is an interesting term and phrase and idea, and I wonder how they model all that nonsense. And so that's some long runway. Of course, higher profits means more competition comes in, blah, 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 competes the profits away. I get it. But it's just incredible shortening. They can't sue these petty scam lawsuits for roofing agencies. I'll get more in detail in an article. Has been ixnayed. I mean, they pretty much, a small percentage, a few bad apples ruined the bunch. The government was like, well, these insurance companies are leaving, so mortgages need insurance. So either the state's just going to become the insurance company of the state, or we need these private companies. But for the private companies to stay, we need to raise the insurance rates. And everybody's manufacturing a bunch of indignation because everybody just wants to be subsidized. And then if you're not willing to subsidize them, then you're a criminal and all that fun nonsense. But it's just incredible bullish information what they did. And barely seeing it covered. And what even is more fascinating is I came across some articles on Seeking Alpha. Normally I don't name drop them. I say your favorite, however I reference them. But articles, I read like the last 3 to 5 articles for HVI, UVE, and then a couple about ACIC and Heritage, the HRTG, I believe it is. And they all just gleaned over, just said, yeah, some regulatory changes happen, revenue's growing and earnings per share are growing, all this rate, and it's a bullish time for insurance companies, and they completely leave out this catalyst that occurred and detailed it to any extent. They just casually blew over it. It was like, no, like it's just, I can't wait for you to read it, so that way my rambling and vagueness makes more sense. So what I'm getting at is, yet again, I missed definitely the first part of the move, the first couple 100%, and I'm late to the party by 2 years, and, well, that hasn't worked out the best for me, but man, it might have some legs to run. Normally, insurance, cyclical industry, tons of exposure to the hurricanes. But I'm really interested about this. Of course, my cost basis is so low that if these things go up anymore, I probably won't add to the position because anchoring bias, and I don't really have any capital to allocate. I could sell Caspi and raise the funds to double my position size in it. I might. I don't know. And I just thought that's interesting. Just how people casually dismiss things and the subscriber run up over trade ideas. Seemingly I just need to post more trade ideas. But it was a good conviction trade idea. I'm gonna make a quick article, all these screenshots I have about all these tweets that were getting posted about the hurricane. Oh my God, it's a 5 and this and that and records and the sentiment. Like all I had to do was not be catastrophic. It's what it reminds me of is the story of a guy puts on a big trade during the Cuban Missile Crisis and puts on a big trade at the close of Friday, however the story goes, at the close of Friday, and his partner's like, what are you doing? My God, like, do you not know what's happening this weekend? And he's like, yeah, I know what's happening this weekend. He was like, either we're going to get blown to smithereens and we're going to have much bigger problems on our hands than our trading account, or nothing's going to happen and we're going to make a lot of money. And that was a similar attitude that I had with the trade. In retrospect, in foresight, because I even said in the article, I believe, part 2, that it's not that good of a trade in risk terms because her stays a category 5, hits Tampa, and just levels the city. These stocks would open up, they'd get halted, they'd be hitting circuit breakers. They'd be down 30, 40, 50% in the day. So you could say, okay, well, the upside is what happened. So now we know. So the upside is from where I got into the position, 20% and 8%, we'll call it. So split the difference, that'd be 14%. So I'm up 14% on the trade. So upside is 14% because that's literally what happened, especially if you're only trading for a day or two. And the upside was 14%. And let's just say the downside was 30%. So that's a risk reward of 1 to 2 or 2 to 1, however you want to word that. So the downside was twice as much as the upside. That's the opposite of what you want. Like you want the upside to be 2 to 1 of the downside. Like, hey, it could go up 100% or it could fall 50%. Well, instead it's like, well, it could go up 20% or it could go down 40%. And it's like, well, and on top of that, there was really no way of determining that. I'm not a meteorologist, but the sentiment was so atrocious. And at the time, it was still being predicted that it was going to be a 3 by the time it hit Florida. And not a 5. Like, yes, it's a 5 now. I understand. And, all these technical terms people are throwing out that they don't know anything about, that they just learned about. And, it sound all scary and everything. And that's because it could have been scary. It's because it was scary. I'm not trying to underplay that. But from a sentiment trading standpoint, which is the only standpoint I'm talking about and care about for all intents and purposes, is that the sentiment was so overdone. Like, people, they're already talking about how it's spinning counterclockwise, and therefore there's not going to be a 15-foot surge on Tampa. And actually, I think it ended up being a negative 2-foot surge. So, but that information was available closer to the day of it landing, and some of that might have got priced in. So maybe I'd be up, instead of 14% in aggregate, I'd be up 8%. So as the storm developed, it became a category 4, and then the reverse rotation, allowing a smaller surge. In this case, it was seemingly a negative one. And like, the information was there, but seemingly the prices reacted on category 5. So it's like, well, that's interesting. And you show all these pictures, all kinds of people coming out of the woodworks talking about this hurricane. I was listening to a cannabis podcast, and they not started off, but it was in the first few minutes they were talking about it. It's like, what is going on here? And so you either place the trade or you don't, and I did, and in some sense I got lucky. In some sense it was skill. That's how things go. Some skill, some luck. Sometimes it's more skill, sometimes it's less luck. I took a flyer, I position size accordingly, and that's that. 3% of my portfolio. If I lost 40%, then, well, let's just keep math simple. If I lost 33%, say it was down 33%, sold out, then I lost 1% of assets under management. I lost 1% of my portfolio, and yet again, so I would lost 1% of my portfolio to risk making, let's just call it 20%. So that'd been 0.6, no, yeah, 0.6%. Of course, in this time, I've thrown out different skews of possibilities. So I was risking 1% to make 0.6%. Like, however you want to do it, it was not the best idea, but I just thought it was way overdone. Just way overdone. And, well, it is what it is. I now have the positions, and that's that. So I think with that said, I've gone on long enough. So thank you for watching, and until next time.